World Economic Forum's annual meeting in Davos is Anil Agarwal of Vedanta, one of the world's leading commodity entrepreneurs. Thank you very much, sir, for your time here in Davos. Commodities have been the hot topic of conversation for more than just this year, the last 2 years. What do you make of where we are in the commodity super cycle and how much more we have to go in terms of rising prices?
No, I've been saying this at least last 10, 15 years that it is important to focus on commodities because mining, exploration, we cannot leave, even if we doing the renewable energy, we are making batteries, we are doing the electric vehicle, everything need 5 times more metal and commodities. And it is very important, especially for India, where we are import based economy. We are most of our money, 50%, 60% goes in importing of gold, oil, gas, fertilizer, copper. So it is very important. And I'm very pleased when I see the mood in Davos that the everybody is saying they are shifting their entire focus on manufacturing, on the commodities, and everybody's, as you see, technology is very important, but technology to be used, how can we do better exploration, how can we do better environment to produce more metal, because time has come where with the technology we can do phenomenal thing. And for India is very important that for $5 trillion economy to create massive job in India and reduce import
To increase substantially from here on as well, sir?
it already increased.
No, it
That also,
has, but from here on also?
I don't know, but there's going to be, there is no new mines, there are no new production. It was very negativity where people have not gone, and Western world is match comparing India. We are different. We have not even born. They have aged. We need our oil. We cannot import dependent. So price wise. Everything, if you see copper, if you see gold, if you see uh,
Aluminium,
zinc, aluminum,
steel.
everything has gone uh, at least 50 to 100% higher price. So it is a lot of foreign exchange outgo for India.
And in your estimation, right now, globally, supply is very far away from catching up with demand. Is that a fair way to put that?
No, no, but because of geopolitical situation, this thing has been because mismatch, because China, Russia was supplying because of the sanction, because of lot of restriction, this mismatch. I don't think there is a much supply gap demand, but catching up for the future and to be self-sufficient, self-reliance of each continent like China, India, Africa. So this is very important.
Okay, I get it. So you're underscoring the importance for why India should invest more in being able to explore and exploit its own mineral wealth.
Explore.
Because, yes,
Mm.
because you believe that the world is in shortage of minerals
Yes.
and that this big shift towards even ESG will require more minerals eventually,
Yeah.
right?
Without ESG, we will never do anything. India is
Okay.
ahead of ESG or renewable energy. Will be the largest renewable energy producer in this Modi government, which is a big thrust we have.
Mr. Agarwal, how do you therefore this commodity upcycle, let me call it an upcycle because you're saying there is still a considerable amount of demand and price to go. How do you hope to be able to use this upcycle to grow further? What are your immediate to medium term growth plans in terms of any acquisitions or new areas of exploration or new lines of business?
No, we are very focused what we are doing. We have this year $30 billion we estimate, $30 billion in revenue, and almost $10 billion in profit. 100,000 people we are employing, and for me, if I can produce, government is very focused. Government should reduce the duty. 500,000 barrel production from 200,000 barrel oil and gas. Very keen. We want to produce 2 million ton of zinc, which
Will
is very important
okay.
for corrosion. Silver, very important for India. So all these areas we are going to increase our production by 30 to 40%.
In oil as well, through cane, you're saying you will be
Yes,
able to
can
increase
uh,
that
two and a half
substantially?
times.
That substantially
Yes.
with large capital investment, or you're
So
saying with
total we are
incremental?
investing $20 billion
Yes.
in 4 to 5 years time, and the $4 billion will go in that, and how 70% will go in natural resource business, and 30% will go in semiconductor, in display glass, fab. So both sides we will grow.
Okay. A couple of quick questions sir, on the fab end. I know you've signed up with a partner. When do you think you might have a clear idea of whether you're going to be able to establish that facility or not? And what will be the timeline for that project?
No, that has already been established. We have very clear plan. In 2 years' time, India import almost $17 billion worth of display glass, and also $17 billion of semiconductor. Both we are in a glass business because we make optical fiber.
That's through
We have a
Sterlite. Yeah.
company in Japan, which is the fourth largest making display glass. So both we are putting it here, and the work is going on. All collaboration is being done. First phase we are going to put in $2 billion and produce in 2 years time display glass as well as semiconductor
So you expect that your production will actually commence within the next 2 years itself,
in two
because
years time.
semiconductor facilities are very challenging to put up. So you're confident that will be done.
We are in a glass business. We have a best of partner. I have this is our. We are very confident that we'll be able to semiconductor, and it's very important for my country. I will not do anything if it does not help my country.
Where will you be putting up the semiconductor
That
facility, sir?
evaluation is going on.
Okay.
3 or 4 states we are looking, and whoever is the collaborator, technology partner, and our consultant, both with her, they are working on, and within 45 days they will give us a recommendation.
Okay. So one of your aspirations was to bid for BPCL, which you did do, but it does seem now that you are the only bidder and the government has decided to put that privatization on the back burner. You're disappointed because I know you were hoping to be able to add to your oil and gas business in a big way.
Not at all. Well, there's no disappointment. I'm in this business. Whatever come, I give my full thought. But it's important that the if government companies, what they are, if they can corporatize these companies, what happened in UK, British Airways, British Petroleum, all over the world, democratic country does not run, government does not run the business. If they can corporatize this listed company of government, will have a 4 times more value than what it is today.
Which is what you were able to unlock in Balco and Hindustan Zinc as well.
Just you can understand how
But so
much
you
money they put in.
remain interested in BPCL whenever they decide to privatize
No,
it.
not at
Will
all.
you remain
Not at all.
interested?
There, there are 100 companies government has. Each company will evaluate
No,
what
wait.
is.
So that's what I'm saying. Your interest in
See, it's like
BPCL
a
will
it's like
continue
a it's
whenever.
like a adjudant. 15 years, everybody is saying when you are going to buy the stake.
I
Same
was
thing
going
with
to
the
just come to
BPCL.
Hindustan Zinc. So now it seems that the government finally does want to sell its stake. All these years you've been wanting to buy and they haven't sold to you. Can you explain to me what is the situation? Because at that one time you had the right to buy, right? So,
No, we have always time. We have option, but the government intention was not to be in this business and wanted to come out of this business, and for some hurdles they couldn't divest this 29% share what they have.
which now they intend to.
uh, Now they have taken to the believe cabinet committee and is up passed. We, for me, we are not interested. We are not. We can't take it
All of
legally.
it. All
No,
29% you won't post.
because we have restriction. Can't take more than 5%. That also we will evaluate. But uh, looking forward, being divested, market will observe it like a.
Private company.
But you have private equity, you have mutual fund, you have HNI, a huge funds are available. They are looking forward this kind of equity. If government divests, they will observe. They should do it at a time, and we will try to take 5%, and it should go to the market. So they
Okay.
are out of the business and run a proper business.
Okay, I know you have a back-to-back meeting, so I'm going to ask you one quick last question. What more in terms of the growth plan? I do know that you're at the promoter level, the parent company is quite leveraged. So I'm not suggesting, a very aggressive growth plan. But in terms of new businesses, are there any other aspirations that Anil Agarwal has that he would like to fulfill at this point in time of business lines that he wants to get into?
We are the least leveraged company in our business,
Okay.
because we have total debt of $11.5 billion at the moment, uh, including both the company, parents and this, against which we have a $10 billion profit, which is the probably one of the lowest in our sector.
Okay.
So I have, but for sure we are looking how, through dividend. At the moment, our plans are all $20 billion to be spent in 4 years' time. That's what we're looking.
And that is the next big
I'm enjoying this. I'm
execution challenge.
focus. No challenge, especially because all are brownfield.
Not
All,
challenging for you, but I'm sure you're for your
yeah,
teams.
yeah, yeah.
Yes.
But this will change my country.
All right, Mr. Agarwal, thank you so much for
Thank
your
you.
time here in Davos,
Thank
and
you
all the
very
very
much.
best.
Thank
Thank
you
you.
very much.
Thank
All
you
the
very much.
best.